Hey everyone, and thanks for jumping back into the Cryptoverse. Today, I'd like to simply say, welcome home, Ethereum. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Feels like a huge weight has been lifted from me. The idea of Ethereum going home. It often felt like a dream that it would one day happen. But here it is, right? Ethereum has in fact gone home. I mentioned before that home was around the $1,500 to $1,600 milestone. Now I know a lot of people said that would never happen, but here we are, right? Here we are. Right now, Ethereum is right around 1,600. Earlier, it went all the way down to what, 1537. So it did go into the 1500s. So it's had a pretty big drop already, and I want to dissect this a little bit more, talk about how this could theoretically play out. I don't really want it to be a long video. I hate when I say that because then it usually is, but I'm going to try to keep this one relatively short. One of the things to note with Ethereum is that it tends to go through this process where it'll go up for a certain phase of the bull market because Bitcoin goes up, right? And the reason why that's important to recognize is because during that time, ETH Bitcoin goes down, right? ETH Bitcoin goes down like it did over here, right? And then like it did over here, and like it did over here, right? So there's certain phases of the cycles where ETH Bitcoin goes down, even while ETH USD goes up. And so you find yourself in a predicament. Well, I found myself in this predicament where I kept telling people, right, to just focus on Bitcoin, and focus on Bitcoin dominance going higher, and that it wasn't really worth spending too much time thinking about Ethereum because, well, quantitative tightening was still going on, and it felt like Ethereum was going to underperform Bitcoin. But it was this weird thing where, the valuation of Ethereum would go up. So a lot of people felt like they were missing out. But the only reason they felt like that was because they were valuing their portfolio in US dollars and not Satoshis. Had they valued it in Satoshis, there really hasn't been, Ethereum's valuation against Bitcoin has been dropping ever since 2021, right? And really ever since 2017, if we want to be technical. But Ethereum going home is just simply the idea that at some point, ETH USD, during the ETH Bitcoin downtrend, will break its support. And when it does, that's when it goes home. Okay? Now, it happened in 2016, and it happened in 2019. This time, so it happened in a halving year, and it happened in a pre-halving year. Well, as we always say, every single market cycle will throw us a curveball, right? And this cycle, ETH did not go home in the pre-halving year or the bear market year, right? It didn't go home in the bear market year, and it didn't go home in the pre-halving year, and it didn't go home in the halving year. This cycle, Ethereum decided to go home for the first time in the post-halving year. So this goes to show you, right, that every cycle has this way of throwing curveballs, right? And it truly shows you why you can't just look at prior cycles and say that it has to play out at this time. What I think is more important to say is that, look, the process is likely going to play out. It's hard to know how long that process takes, but this is a process that we've always seen happen. And essentially what it is, and I get, it's hard to know if it's going to play out the exact same way, but historically, when ETH USD has broken down, it's been about a 50 to 55% drop from sort of the breakdown point, right? And of course, last cycle, we did get the pandemic crash, so it technically went down 60%. So let's just say 50 to 60%. But without the pandemic, it was about 50%. So far, how far has Ethereum dropped, right? So far. Well, up until this point, it depends on how you draw the line, right? I mean, it's a little bit hand wavy, and to some degree, it's easy to make fun of just people drawing lines, but you could argue that it's down about 40%. Now, look, I don't know if it's gonna go all the way to the lower part of the regression band. I do know that in 2016 it did, and I do know that in 2019 it did. So it's always possible that it goes lower. Always possible. With that said, I mean, I also think it's a fool's errand to try to time things perfectly, right? It's impossible to do that. It's easy to think you can do it, but I'm telling you, right? Take it from someone with experience trying to occasionally do that. It doesn't really work out that well. And I don't know. I mean, I don't know where the bottom is. I mean, and by the way, I mean, it's always possible that we go below the regression band as well. But I think it would take, a full-blown recession to do that. Now, you could argue that we're in one right now, with the Atlanta Fed projecting negative GDP for Q1. But, I mean, the labor market still hasn't completely broken down yet. We'll see if that changes with the S&P dropping so much. But I want to talk a little bit about the other markets, too, because that will truly dictate just how low Ethereum goes before it bounces. One of the things I've mentioned before, and I actually talked a little bit about this yesterday in the video we did on Bitcoin. We called it dubious speculation. I would encourage you to go watch that video, because I talk about this a lot more in that video than I'm going to in this one. But there's this thing that the stock market occasionally does, where, again, I provide examples in that video, so just go watch that, where when you get these like nasty crashes, what it'll sometimes do is it'll sweep a low exactly 1 year before. Okay? Now, that low was April 2024, mid-April. How many times have you heard me say to expect weakness in stocks from late February to mid-April? First, I said between February OPEX and March OPEX, but I went on to say given tariff uncertainty, the important inflation print coming up in a few days, and the labor market uncertainty, it would likely extend into mid-April. Now, if you look, we're approaching mid-April now, and this is getting pretty close to sweeping the prior low. But I'm recording this on a Sunday night. The market isn't open yet, right? The stock market isn't open at the time of this recording. But if you look at futures, right? If you look at the stock market futures, what you'll notice is that it just went below the April low, right? From a year before. It just went below that level. Now, again, I'm not saying that it can't eventually, go below that. It already has, right? I mean, it wicked all the way down to 48.32, right? I mean, that's practically the prior high from 2021. You see? But this is an important pattern that has played out in the past, where it'll go below a low from a prior year. And I know a lot of people didn't really think it could drop that low, but it just did, right? I mean, from the top, this is more than a 20% drawdown. 21, 22%. Now, the reason I say that is because there are actually recessions in the past where it just dropped about 20%. And that was it. In fact, one of the ones that we talked about a lot was the 1989 to 1990 recession, where it was, in fact, a 20% drop, maybe a little bit more. But let me go over to the S&P here, because this is the futures. But yeah, like if you look at what happened over here in 1989 to 1990 is what I meant to say, 1989 to 1990, it's about a 20% drop, right? So it at least has to be like on your radar that something like that could be playing out. Now, obviously, it could be a much larger drop than that, but one of the things to note, and I've sort of talked about this before, is that, some of the times you'll see major lows swept, right? And then you'll get these bounces before it goes even lower, right? That can easily happen. It's happened many times in the stock market. So, I can't say for sure, but the reason we're even talking about this stuff for the S&P is that it matters for Ethereum in terms of how low it actually goes before it gets more durable bounce. Now, the one thing you have to remember about this cycle is that there's been a lot of talk about inverted yield curves and whatnot and recessions. And, even right now, the Atlanta Fed is projecting negative GDP for Q1. But I guess sort of the thing to remember is that it's the stock market going down that leads to recessions, right? It's not layoffs that lead to the stock market going down, right? I mean, if you look at the dot-com recession, right, it was the market went down for a while and then you got a recession. But if you look at this drop, right, if you look at the drop from 1998 here, it's about a 22% drop, but there was a very quick recovery. And so because the market didn't linger down here for too long, you could argue that it was able to sort of keep that recession away for a while because it didn't stay there. If the stock market just stays down here for a while, that could become very problematic. If it can recover quickly, maybe they walk back some of the tariff stuff, I don't know, then perhaps you have a similar narrative. Now, one of the things I'd like to do an update on is the S&P divided by M2. Because we actually looked a lot at this for the last couple of months. Basically, this idea of getting a very similar drop. This was about a little over 20% drop. I know right now it's only an 18% drop, but remember, if you look at futures right here, if you look at the S&P, it's down another 2.5%. So that actually puts it a lot closer to that level. So again, it's going to be dependent on where the S&P ultimately finds that support. The other thing I'd like to mention is that in order for Ethereum to break down, you needed to see, the stock market and Bitcoin too to show weakness, right? You needed that weakness to come in play. That weakness is obvious when you look at the running 1-year ROI for Bitcoin because it broke down kind of like it did in 2019, right? Kind of like it did in 2019 right here. And it didn't go back. It didn't go up like it did in 2017, right? So 2017, it went up. 2019, it came back down. This year, this post-halving year, it actually came back down. So this actually still looks more like 2019 than it does 2017. Now, I think a lot of that is just simply due to monetary policy, right? Again, if you look at the balance sheet of the Fed, you'll notice that this regime here, where ETH USD was going up and then it broke down and went home, occurred, during QT and then sort of the beginning stages of QE. Right? So right now, you're seeing ETH do a very similar thing as quantitative tightening continues. Now, obviously, the Fed's announced they're going to be slowing QT in in May, I believe. And I know a lot of people were hopeful for alt season like they always are, but last May, May of 2024, they announced the same thing. And all Bitcoin pairs still went down, right? So you have to be careful, reading into those narratives too much because, a lot of people want that to happen, but just because QT is slowing doesn't mean that the wind's still not blowing in the wrong direction, right? So in this case, one of the things I'd like to draw your attention to is something I've talked about a few times, and it's the risk metric for Ethereum. So if you look at the risk metric for Ethereum, current risk right now is 0.368. Now, the reason why this is interesting is because if you just highlight the 0.3 to 0.4 risk band, the time when Ethereum went home in 2016 was right here, right? Q4 2016. And when that happened, ETH USD risk went to 0.3 to 0.4, right? 0.3 to 0.4 risk. When ETH USD went home at the end of 2019, ETH USD risk went to the 0.3 to 0.4 risk band, right? So I kept thinking, hey, why not? Why won't the same thing happen again where ETH goes home, and when it does, it corresponds to the 0.3 to 0.4 risk band? Ta-da! Here we are, right? 0.3 to 0.4. And as it goes to the 0.3 to 0.4 risk band, ETH has gone home. Okay? Now, we could look at this on a different way where we look at it like this, where we take the color code out of it and just look at where that risk metric is right now, 0.368. In 2019, you can see that it found a low, I guess, around this level. Yeah, actually a little bit higher than the current risk. In 2016, it actually went a little lower than the current risk before finding a more durable bottom for a little while. But that is, and then by the way, I mean, we did get a recession back then. It obviously did go lower. It did eventually go down to 0.332 risk. Now, if you look at 2016, it bottomed out around 0.333 risk. So 2019 was 0.332. 2016 was 0.333. Remember, these are daily closes. They don't include intraday wicks. But if you go look at the screener here for Ethereum and we go look at the current risk levels, you can see that, like, you know, I guess we've already gone. How far has it? You know, I mean, it's gone down to 1537. So almost 0.35 risk. 0.33 risk, I guess, would be somewhere between $1,400 to $1,500. 0.3 risk is getting pretty low, and it's all the way down at $1,291. Now, what's interesting is in order for it to go to $1,291, to go to 0.3, the risk would actually have to go lower on a daily close basis than it did in 2016 and 2019. Now, remember, the stock market wasn't crashing, you know, back then like it is today. So, I mean, maybe that'll help it get there. But the one thing that I don't want people to just, like, look at the stuff and be like, all right, well, it has to play out a certain way, is that, like, at the end of the day, all models are wrong and some are useful. And I was hoping that this regression band would be useful. And I think it has been useful. Like, I mean, it helped me to stay on the right side of the Bitcoin dominance train and the right side of, you know, people calling for all-time highs for Ethereum. And I kept thinking, like, hey, like, I'm not, like, I think Ethereum will eventually go to all-time highs. But I always thought it needed to go home first, right? It needed to go home first. So the one thing that I want to mention here, we've talked about this for a while, is the comparison with the S&P 500 in 1989 to 1990, right? Now, again, you might say, Ben, you know, why are you fixated on this? And I think sometimes, like, when I find, like, patterns, like, I just become stubborn about them, and I know in the back of my mind, like, it's probably not going to play out the same way, but until it deviates, it's hard for me not to at least bring it back up, right? It's kind of like how I occasionally bring up with the QQQ, like 20 years ago, and the similarities that we have to at least acknowledge until it's proven otherwise. By the way, back then, the QQQ did find a local bottom around mid-April, and then it bounced for like 3 months. May, June, July, August, yeah, maybe 4 months before it before the recession hit. But the reason why I go back to this is not just because it looks like Ethereum to me, because you could argue that it looks like it, right? You have sort of this, like, triple top, right? Triple top, and you sort of have a double top right there, but more or less a triple top, and you have a low, a lower low, and then a final lower low, and that final lower low was the recession low, right? Like, that was the recession when it tagged that trend line. And so when I look at Ethereum, I'm like, I know it doesn't have to play out like that, but I can't. And by the way, let me use an exchange that has, because some of these exchanges don't have wicks that go down nearly as far. If you look at that, right, I mean, like, I look at it and I'm like, is it the same thing as what the S&P 500 did back in 1990, where, like, you know, there was a recession, but if you look at, like, the unemployment rate, like, look where it, like think about this for a minute. Like, this is what I think people really need to, like, focus on with the unemployment rate, is that, you know, the low in the unemployment rate that cycle was like 5%, right? The market bottomed when the unemployment rate was 5.9, right? The market bottomed when the unemployment rate was 5.9%. the unemployment rate continued to go up to 7.8%. Let's pretend like, for a moment, we're living in 1990, right? I'm a 90s boy, right? I was born in the 1990s. But let's pretend like I wasn't an infant, right, in 1990. And we're looking at the markets and we're thinking, oh, yeah, like the unemployment rate's going up. And then you get to, you see the market bounce and you're like, oh, well, no, the unemployment rate's still going up. Market's got to go lower. And then it just does it, right? It like just kept doing that, And you have to be careful about, because I mean, the markets are getting annihilated right now, like absolutely annihilated. And no one knows where the bottom is, right? No one knows. But at some point in the future, there's probably going to be some bad macro data that comes from this. But unless it's incredibly bad, you could argue the market's price. I mean, a 20% drop in like 6 weeks, that's pretty big. I'm not saying it can't be more. If you look at like 1987, it was like a 30% drop or something. And if it does drop 30%, then Ethereum would absolutely go to the lower part of the regression band. But I look at that chart, and by the way, you might say, well, Ben, this is some random fractal. Like, why pick that one? I mean, it looks the same to me. Maybe I need to get my eyes checked, but it looks the same. But also, just sitting around on a Friday night, casually looking at this chart, or not this chart, what was it? I did it backwards. I was sitting around one Friday night, casually looking at this chart right here, like I'm sure many of you guys were as well. And I noticed, I'm like, oh, like this chart tagged this trend line. And it's only done it twice before. The financial crisis. Let's hope we're not in that, right? Like, I don't want that to happen. And 1989 to 1990. And it was in this bounce by this metric that we're currently getting. When that bounce topped was when the stock market bottomed. That's when it bottomed, right? Right here. Look at the low for the S&P in 1990. It was exactly when this metric found that sort of that lower high, right? That's when the stock market bottomed. So I'm looking at it over here and I'm like, well, what if that's when this market bottoms, right? The stock market bottoms whenever interest rates minus the 2-year yield hits this lower high, right? You could argue that this metric, I mean, everyone's sick of Wyckoff distribution. I've heard Wyckoff distribution enough times the last 5 years to last me 10 lifetimes. Like, I don't need to hear it anymore. But what if this metric is also in some form of like Wyckoff distribution, where you have sort of these highs, you get a higher high, and then the fourth one, and then it goes down, right? So I'm watching this very closely, because when this tops, it could very well be the bottom for the stock market, at least for a while. And if it's the bottom for the stock market, when that metric tops, then there's a good chance it would be the bottom for Ethereum. Now remember, there's other. I knew I was gonna go a long time. There's other pieces of the puzzle, right? Obviously, there's ETH Bitcoin, which still hasn't even turned around yet. I mean, it just hit 0.0198, right? If you look at it on sort of like an ETH dominance, right? If you look at ETH dominance, this thing has gone all the way down to nearly where it was in 2019, right? It's gotten pretty close to that level. And the argument, I guess, is that, well, I mean, it never truly had, we never truly had an end to quantitative tightening, which is when it bottomed last cycle, right? Quantitative tightening has just continued. And so ETH Bitcoin continues to drop. So when I think about Ethereum and, how to play this and sort of what to expect, there's obviously a lot of risks involved, right? I mean, like, it could always go lower than what I'm thinking. And I don't know, right? I can't possibly know exactly where the bottom's going to be. What I can say is that Ethereum has gone home, right? Which is nice. You don't have to hear me say that again until next cycle, right? Um, it's at home, right? It made it home. And did it take longer than I thought? Absolutely. Have I learned a lot of lessons this cycle? Absolutely. But the process is still, still played out, right? The process still played out nevertheless. And here we are in April of 2025, and Ethereum finally went home. What happens here, right? Does it get a durable bounce here? If the S&P sweeps that low in mid-April, is this it? This is where I go back to like the 2019 move and the 2016 move, because they're very different from each other, right? Very different, actually. If you look at 2019, it was more of a structural drop, right? Like it was just sort of a slow bleed down. And it eventually got there. But in 2016, it was just a very quick capitulation down, right? The week that ended with Ethereum hitting the regression line, the fair value, was the week preceding when it went all the way down to the lower part of it, and even went below it. The week preceding that. So if you look at like this last week, it just went below it. So I'm thinking like, well, gosh, I mean, like, if there is another sell-off in the market this week, if the S&P 500 continues to drop, what if Ethereum just goes further down in the regression band and then it gets a more durable bounce? The other thing that I know I've mentioned a few times is if you look at Bitcoin, we just had the death cross. And you guys remember when I made the video about that, like, I don't know, a week ago or something? And the reason I made it then was because I was like, look, guys, there's going to be a lot of people that make videos about the death cross when it happens, but usually the market sells off before then. And sure enough, it did. I mean, I think when I made the video, Bitcoin was, what was it at, like 87K? And then now it's at 78K, right? So a lot of this drop has happened. The question is will it bounce now? Well, if you look at last year, if you only look at last year and the year before, the answer will be yes, right? It bounced when there was death cross. If you look at 2021, it's not as obvious. There was an eventual bounce, right? There was an eventual bounce, but it wasn't immediate, right? You had the death cross right here, and the market sort of sold off into it, right? And the market, I mean, if we get it exact, because I mean, in cases like today, like, when every day, like the stock market's dropping like 5%, I guess every single day matters a lot. Back then, the stock market, or the death cross for Bitcoin occurred on June 19th, and then the market found a bottom on June 22nd, right? So it was just like 3 days later. So sometimes, it's not like the market has to bottom immediately before bouncing. But I just want you to keep in mind that, like, if there is another sell-off in the stock market this week, then it could just repeat. Ethereum could just repeat what it did in 2016, where it just immediately goes to the lower part of the regression band and then get some more durable bounce out of it. And maybe that would correspond to some relief from all this tariff discussion that we've been having for a while. I don't know. I don't know. At the end of the day, I think with any of this stuff, whether you're trading Bitcoin or Ethereum, I think the strategy that makes the most sense over a long enough period of time, if you believe in this stuff, which I know many people are definitely skeptical of at this point, but I think the best strategy is going to be a long-term DCA strategy, where you're not buying in, on January 20th when everyone's screaming strategic reserve, right? And instead, you're even de-risking at that point, because we noted the differences, the similarities between Bitcoin and the QQQ. I know a lot of people want answers, and they want to know, and this is the trap that I fall into sometimes, right? Like, 'cause sometimes I'll get a prediction right, and then everyone will think like, oh, well, he got that right, he must know what's going to happen next. Usually that's where I go astray. One of the things I've learned is that when you do get something right, you should not get overly confident, because the market loves to destroy overly confident people. Whenever you truly get confident and you think like, hey, it's going to do this, that's when the market rips a completely different direction than what you're thinking. So try to avoid those mistakes, right? When you get something right, don't assume that you're immediately going to be right about the next thing, because oftentimes the market does not work like that. Just because you're right once does not mean you can be right again, which is why I get really frustrated with people, on these social media platforms. They'll hold something against you that happened like 3 or 4 years ago, or I'll see them do it to other people. It doesn't mean their opinion's any less valid. It's because you get something wrong. No one has a perfect track record. But anyways, I digress a little bit. I would say, with Ethereum at the fair value right now, it has certainly gotten a lot more attractive, right? In terms of where the ETH Bitcoin pair is, where the ETH USD pair is. It's finally looking a lot more attractive, because it looks kind of like where it was in these prior cycles, right? Where it truly started to build out a more durable base, right? And we've also talked before about these like macro higher low structure that was likely going to form eventually. And the question is like, well, where does that higher low form exactly? If you look closely at this cycle, you can see there was this low here. This higher low is nearly where that macro higher low occurred, and that's actually where the recession swept that low. So if you look at it this cycle, you can see that low is below the regression band, but the higher low right here is actually right at the bottom part of the regression band. So, Ethereum is home. Maybe it'll stay a while. Maybe it'll stay a few weeks. Maybe it'll stay a few days. I don't know exactly. A lot of it's going to depend on the stock market at this point. I mean, the fate of Bitcoin and Ethereum right now is going to be mostly in the hands of the stock market. And if you guys remember the video that I posted yesterday, when everyone was talking about how Bitcoin was now not correlated to the stock market anymore, and people were sort of celebrating that, what did I say? I said, guys, whenever people talk about that, give it another day or two, and Bitcoin normally follows suit. And sure enough, Bitcoin sold off, right? I mean, it dropped 6% yesterday, when everyone was talking about how it was no longer correlated to the stock market. And how Ethereum dropped 12.5% yesterday, when people were saying it was when people were more optimistic about this stuff. So a lot of times when people start saying that, like, oh, Bitcoin's not correlated to the stock market anymore, normally what happens is like a couple days later, a few days later, sometimes a week or two later, then it hits the Cryptoverse. I don't know why it plays out like that, but it often does. But I do think this video is certainly an interesting one, because I can't help but smile, because it's been a long time coming, the idea of Ethereum coming home. So I am happy that it is finally there. If it does go lower into the regression band, it's likely due to the stock market and Bitcoin, right? Like if Bitcoin continues to sort of sell off, whether it, if it tests the 2024 high, or if it retests this level, right, the lower high structure, that's how Ethereum, I guess, could go deeper into the regression band, right? But here we are. Ethereum has made it home after all this time. Welcome home, Ethereum.